What's going on, guys? Welcome into today's episode of Money Moves. As always, your host, Matty A, Mr. Ryan Breedwell, out in Kauai.
Aloha.
Aloha. Looks like you guys are having a great time out there. We've got a great episode for you guys today. We cover all things stocks, real estate, personal finance, and a little politics because at the end of the day, policy impacts your money. Man, it has been a wild last week, to be honest. There's been a lot of stuff going on, mainly in politics. Things are heating up as we move closer and closer to November. We'll have some updates for you guys there. Stock market, some stuff going on there. We've got some reports, as always, that we will cover, GameStop updates. We've got some insights on what the job market is doing and are things cooling down? Is bad news going to be good news for rate cuts coming in September? We've got some more real estate data coming out as well. First and foremost, Mr. Breedwell, how are things going out in Hawaii?
They're going good. I'm honestly the only thing that's rough out here is getting used to the time change because I hit 9 o'clock and I'm like, this is like midnight. I'm used to it feeling like midnight, but then I wake up at 4 in the morning and I'm ready to rock. So excuse me for having my little puffy eyes here today. I'm still getting used to the sleep, but beautiful weather. It like has a 10-degree spread, 70 degrees in the night, 80 degrees during the day. It's going to be 84 today. So they're like, it's going to be so hot. It's going to be above 80. So really nice. People are great. Much more of an outdoorsy island. So not as
Yes.
just little towns. It's North Shore, South Shore. We're on North Shore, staying near like Hanalei Bay and Princeville. And it's really nice. Food's good. People are nice. My wife is eating her weight in poke. So we're doing good. It's really fun.
That's
Mhm.
awesome. We've had some wild stuff heating up in the news with the Trump hearings. Trump was
Mm.
officially convicted of 34 felonies over the Stormy Daniels hush money $130,000 trial this last week. The Democrats are loving that. They are running with that all over social media right now. I will note this: no cities were burned after that conviction, and showing what clout and I think honestly the clout that Trump has, but also the dissatisfaction people really have of all sides of the aisle for this conviction and how this judge essentially changed the rules of how these rulings and convictions actually play out. The Trump administration went and raised $200 million since the conviction was made, 70 million from small donors and 25% from first-time donors, which is literally unheard of in the history of fundraising for presidential campaigns.
Yeah, I'm interested to see if those charges like stick. My guess is they'll appeal and appeal and appeal, and it'll get past November. It's
Yep.
looking like if things go the way that they're showing, that he'll get elected and then he would just self-pardon and be a felonious president, because the charges that are felonies, I think they're like enhanced misdemeanors is really what they are. They're typically would be misdemeanors, but I think that they're not going to hold him back from being president. And I don't think that they will. I actually think it helped. And I think that we can see that the old saying that money talks and everything else walks. That's quite a bit of money. And I can't remember some of the bigger names, maybe some individuals I think who I'm referring to that came out and they did like $700,000 donation. And
Yeah, and they were pretty. One guy I know was a pretty long
you know who
time. He was a Hillary
yeah,
Clinton supporter. He donated like $700,000 or $800,000. There were
yep.
some pretty
Somebody did.
big
Somebody was
names
like
like
in the
that.
industry like me, and they did like they're maxed out to where what they can donate legally, and they said my legal limit is 300,000. I'm doing 300 grand. So yeah, I really don't think that. I think that you were right when you were talking about it a few months ago, where you said if they do that, they being the left prosecute Trump, and even if they're successful in convicting him, it would be a banana republic or type deal, and
Yeah.
it would not fare or look well for the convicting side, and it actually would help Trump, and I think it did.
Yeah, I think when you think about how this reflects back on democracy, when you're going after a political opponent, when historically you look at what so many of the leaders of the left have done, and you can say it on the right too, have done historically to go to the extent that they have on this one. And this has been, I don't want to call it a witch hunt, but I want to say that the way they've gone after him consistently over and over and over again to keep him off the ballots makes it look like a witch hunt, right? Because when you think about what other individuals in politics have done and are continuing to do to make it seem like justice was served on this $130,000 hush money trial with Stormy Daniels, which, if you actually go in and start really digging in to see a lot of what wasn't able to be presented that they kept out of court through a lot of the things that were questionable legal proceedings, he probably wouldn't, this would have been thrown out a long time ago. But because they were allowed to do that, they were gag ordering on him. They were preventing certain things from coming in. And then they changed the way the judge literally said that we don't need unanimous decision from all jurors to convict. And then on top of that, that when they did call out the convictions, they didn't state the reasons of what those actually were. There were so many things that were just really
And that
weird that
that right
people,
there is like a huge breach of your, I think you're constitutionally allowed to, like, or not allowed, required to know charges against you before they're brought,
right,
so that so you can defend yourself. It's almost like, hey, take this test and it life or death for an extreme example. And okay, what's it on? We'll let you know day of. And it's like, but go make sure you study. So that's the equivalent. It's just, obviously, I posted on my social media that it wouldn't be fair to happen to anybody, for no matter who I don't like or whatever. It doesn't mean that it would be fair. It wouldn't be fair to happen to Hillary Clinton, Obama, Nancy Pelosi, anybody. It's not fair to have a trial done like that. If you have done something wrong, it should be easy or not that hard to convict you of it. And the lengths that they went to convict Trump was obviously pretty far, and it seems somewhat, if not fully, politically motivated. So time, I think, is going to unravel that as well. I think that's more of sticker shock than actual anything that'll stick and be serious, but we'll see how it pans out.
yeah, I think as it plays out long term, I think the truth will be revealed and it will probably not end up sticking. But again,
I
who
agree.
knows? But I love when you've got so many people on the left who are constantly shouting in the name of saving democracy that if we could just jail Trump, if we could get rid of MAGA, if we could end the Electoral College, if we could get all of our judges in the Supreme Court, we could ban voter ID because that's so racist, and we need to censor free speech because extremists are dangerous to our democracy, then we could save democracy. It's funny, right? When you really think and wrap your head around what that messaging is. That is totalitarianism. That is
Yep.
trying to actually end democracy in favor of your own political views. And anybody who is a potential opposition to that is a threat to democracy, when really that is, in plain sight and definition, a threat to democracy.
Yeah, and as we're starting to see, when you have that low level of, like, extreme thinking, that still can't even coexist. It's like orderly chaos when you get all those people in a room. And I think we saw even this past weekend that there was like a pride parade, I think, was it in Philadelphia? And you
Yeah.
had two.
Free Nine was going against the
No,
LGBT Pride Parade.
yep, and they had a huge, massive brawls of videos. I saw people fighting, and the old saying, they just eat
Left on left crime,
themselves.
man. That's shocking. That's a
Yeah,
first.
yeah, and they're gonna. I think that they're self-destructive, so they'll just eat themselves to death, and they already are. And you saw with the people starting sitting in front of people blocking traffic and shutting down bridges, immature ways to try to get your point across because you can't have an intellectual conversation.
I
I
love
think,
Joe Biden's tweet as we wrap up on this point. He said, "No one
yeah,
is above the law." And I thought that was funny. And somebody, Robbie Starbuck, who is pretty outspoken on a lot of things that he believes, but he's pretty tasteful in how he goes about sharing what he shared. But to show his tweet, he responded to Joe Biden's comment. Exceptions to this include Fauci, illegal aliens, every single person on the Epstein client list, your son, you, your brother, the person who left cocaine at the White House, Obama, Bush, Clinton's, every elected official, insider trading, big pharma, the WHO, and George Soros, to name a few, right? It's funny how you got to eat your words every once in a while. Be careful what you say, because obviously there are very clear black and white examples that Americans just aren't stupid. We know that there are absolutely people who are above the law, and going after and acting like Trump was just the end all be all for we're just protecting Americans from this felon who's such a danger to our country. I think a lot of people are waking up even more. They're just continuing to wake up the beasts, the sleeping giants that ultimately just don't want to see this happen to their country. Not because they like Trump. I'm not a big Trump fan, but I do not like seeing stuff like this play out in our country. And it's making me honestly want to root for Trump more and more, because he is the political figure that is in opposition to this ugliness.
Yeah, it's going to be a pretty easy vote for me because come this November, if the two candidates that are on the ballot are who they think they are.
Yep, absolutely. Now, this other, and I don't want to get too far into the politics space here, but I think it's important because I was extremely passionate about, and you and I both were, about how we felt about people's freedom of choice to not take the jab, those also being respectful of those that wanted to. And obviously, you had one political talking head that was ultimately writing policy and influencing policy and dictating how we as human beings, as we as business owners, we as investors, were able to do or not do things in Mr. Tony Fauci. And I don't know if you've been paying attention to any of the hearings, the congressional hearings over the last 24 hours of what's been coming out and how he's been getting grilled and eating his words over the course of the last 3-4 years. Did you see any of those over the last couple of days?
I saw a few of them last night. It's just weird. It's like they're like, hey, did you say this? And did you no, we didn't do this? And then they play a clip of him exactly saying that. And oh no, we mean something different by that's not what I exactly mean. Blah 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 blah. So I've seen a couple clips. I saw a couple of them with only like captions and without sound because I was watching them late at night.
Yep.
So I have to catch up on that myself, but I'm sure it's very interesting. Probably very similar to when they bring up all the other people that we watched with Senator Hawley from Missouri. I think he's where he's at, or I don't know exactly the state he is, but when he grills people too, and he's just like, you say that you're not doing this, but there's clear and concise evidence that you're doing that. So and it's wild because the people will just act like you're dumb and talk stupid and say, oh yeah, no, we didn't mean it that way. Or I'm in charge of this, but I had no idea this was going on.
Yeah, I mean, I just flat out, I think there's got to be accountability. And politicians are so good at being slippery. All of them are, right? Of like avoiding any kind of accountability. But for someone who forced businesses to go under and to shut down while he was out eating dinner or going to baseball games, when he was suggesting that kids needed to get masked up or schools needing to get shut down, where people were unable to go see their family members who are passing away or to see their family members being birthed, to be able to spend time with your family, while he was doing the complete opposite. When you saw the amount of mental challenges and disorders and depression and suicides that spiked because of policies that this individual promoted, to see so many people lose their careers, their financial stability because of things like this, it's one of those things where you cannot allow someone like this not to be held accountable and just sweep this under the rug and to move on. Somebody like this, in my opinion, he needs to be in jail. And of course, he won't be. But one of the big kind of headlines that came out was that the National Institution of Health scientists made $7 and $10 million in royalties from drug makers, a fact that they tried to hide. That to me seems like an insane conflict of interest. And I've never been an anti-vaxxer. I'm not somebody, I know there's a lot of good vaccines out there, measles, smallpox. You can go down the list. There are some great ones that are good for humanity. But then when you see, right, politically incised relationships with big pharma that are financially incentivized and people are benefiting from it, that is a great way to lose trust in an entire industry that could be a great benefit to humanity. And yet you do things like this, right? It totally erodes that trust, the foundation that people are going to start from when it comes to making those kind of decisions. But I just thought it was very interesting to see that, again, more and more of this stuff coming out. And I just give a big shout out to all the people that stood their ground, the people that military men, pilots, police officers, firefighters, so many people that
Doctors.
individually, doctors, nurses, individuals that really they for religious beliefs, they stood their ground and made really tough decisions and showing to be the right decisions for a lot of those individuals. And obviously, when you always follow the money or you always follow the political power plays that are often behind a lot of these things, very interesting to see this all starting to come out now.
Yeah, it's all like you said. The pendulum has swung so
Oh, it's
far.
swinging.
Yep, it's finally starting to swing back.
Yes. Now, the only other thing politically, right, and again, we're just going to be keeping tabs on all this stuff as things are going to continue to heat up heading into November. So this is always fun popcorn to enjoy while we're making our way into more of the dry stuff when it comes to data and statistics and reports that tie into the economy, which we're going to be shifting over here to in a second. The Biden administration has announced they've officially temporarily shut the Mexico border to asylum seekers, that being a very big issue, pretty much his entire administration undoing so much of what Trump did in terms of those
Mhm.
policies. And now, as we lead up to maybe the last 4 or 5 months heading into November, they have temporarily shut down the Mexico border. What are your thoughts on that?
Little, too late. What is it? 11 million migrants later. So I think the reason they were not doing the executive order was because there was supposed to be like a bipartisan bill that was worked on, but the Republicans in the House and the Senate are one or the other. I can't remember, but Republicans blocked that bill. I'm not familiar with the bill, but I'm sure it was blocked for a decent reason. There was probably too much of something that was not bipartisan. It was probably too far left,
Yep.
is my opinion.
Yep.
But that's an easy executive order that could have been put in months ago. If the daily crossing average gets above 2,500, you have to shut the border. It's way above that. So that politically motivated. And I think finally he's doing it because he's catching so much heat for the amount of people coming over. It's being talked on the news. There's no excuse for it. There's no covering it up. It's widely covered from all sides of the media. So I
Can't
think
hide
it
it
just
anymore.
was to save face.
Yeah. Shifting over to the stock market and economic reports. I don't know if you saw yesterday. I didn't know if I needed to hit you up. I was trying not to bother you on your vacation, but I saw that numerous multi-billion dollar companies were down 99% in their stock in seconds, including Warren Buffett's Berkshire Hathaway, the Bank of Montreal, and gold. The New York Stock Exchange has said it is investigating what happened. But did you guys get any wind of this or get any insights on what they found as they corrected this problem?
There's human beings and market makers run the market. So it's just a clerical human error. It's happened a couple times in the past few years. Just a error, human error. Same thing happens. Bitcoin had that one thing where it dropped $70,000 in price and went right back up a few seconds. There's just little errors sometimes that happens when you have things like that. So no, it wasn't a big deal.
Could
Nothing to be
somebody
concerned
have
about.
bought a significant amount of stock at that price, or would it have prevented them from doing that while that
Yeah,
glitch
yeah.
was happening?
I'm sure there's one or two orders that probably slipped through, but most of the orders just get canceled.
Got it. Got
Yeah,
it.
so that's a no, nothing burger. Pretty much, just was a clerical error. Those companies did not lose that market value. Nobody owns that amount of. There's not that much concentration, and so it's like that everybody would sell at the exact same time, especially those three. That just doesn't make any sense. So no,
Yeah.
that just was an error, and that's going to happen sometimes with systems. They're not perfect.
I noticed that GameStop has continued to remain in the headlines and almost top of the headlines when it comes to stocks. The SEC has announced they are looking at GameStop options activity for manipulation after the Infamous Roaring Kitty disclosed his option trades. Now, for reference, the US Congress option trades all the time. For example, Nancy Pelosi bought NVIDIA call options before major bills. But that being said, E-Trade has been talking about kicking Roaring Kitty off their platform. Dave Portnoy says that's how you know he's doing something right. GameStop short sellers, though, are set to lose just shy of $1 billion since Friday's close. What are we seeing happen with this whole GameStop craze in stock? And is there anything new there? Or is this just playing this out as long as there's still some gas left in the tank?
I think the majority of it is the last part. I think that it's a little bit wrong for the SEC to open up an investigation on him because he posted a legally placed trade after it was done, showing his position, something that a lot of people all over the internet do all the time.
Yep.
He's I can't remember if he's still a financial advisor or not. I know he was for Mass Mutual, but I'm not sure if he still is or not. So there could be some things there if he holds a license, like depending on his license and who he's regulated by, whether it be FINRA or the SEC, that could have some implication. I'm regulated by the Securities Exchange Commission, so there's certain things I can and cannot say, or if I do say them, they have to be followed up with certain verbiage and language. But overall, I don't think he did anything wrong from a legal standpoint. Do I think that he is probably pumping that stock in a way? Yeah, I do. I think that he cashed out a lot of his stock position. I think he put a lot of that over the past couple of years. I think he put the majority of that money into call options. Right now, I don't think his calls are in the money. I think they're out of the money actually, and he needs the price to get to a certain level. I think those call options expire on the 20th or 21st or something like that, around that date of June. So he needs the stock price to run back up. So when his call options close out, he can close in the money and make a profit. I don't think that type of euphoria being put in the market, especially on stocks that are literally used because of but it's just funny. That doesn't really teach people fundamental long-term,
Right.
like how to actually make money. It'll make a few people rich. It'll make a lot of people poor. And somebody will do it again to something else. And then there'll be another crypto rug pull today. There'll be a bunch of fraud we're on that side of the street. So that type of stuff is going to exist. I wish it wasn't so much headline news, and I wish so many people weren't involved with it, because you can just make money other ways just by being diligent and being a long-term investor and buying quality for a long period of time and holding it. And a long period of time is 10, 15 years on just consistently investing a good amount of money. It doesn't take treating life like you have to pick the winning lotto ticket in order to be successful, because that's what I feel like a lot of people that are investing in those type of stocks think investing is like, and what you have to do. They say, oh, I can never get rich or wealthy by investing $500 or $600 a month. So I'm going to try to throw everything I have into one basket and hope I get rich overnight. And that's the sad part about that, is because it encourages that type of behavior. And I don't think that type of behavior is good long-term.
Yeah, it doesn't build any kind of foundational skills and or the right mindset for long-term wealth building. Now, I've been seeing this clip float around for the last few days. One of your favorite online influencers, Mr. Grant Cardone. Tone, if you don't mind pulling this up on the screen. He's basically calling the 401k a trap. I'm going to play the clip and I'd love to get your take on it, knowing that it's an instrument, it's a tool that many people subscribe to and have been programmed to subscribe to for many decades. So I'll play this clip and we can get your thoughts on whether or not investing in a 401k is a great vehicle and tool for investing.
In my 401k.
I'm sorry for you.
Why do you feel sorry for it? It's a way to put money in without paying taxes on it.
It's a way for you to be trapped for 30 years.
So you can pull it out when you're
63. How old are you right now?
50.
13 years from now, will taxes be higher or lower?
Higher.
You will wish you would have sold it when you were 50, because you'd pay lower taxes, dude.
You don't pay any taxes when you pull out money out of your 401k if you wait until you're 63.
When you start using that money, you're going to pay taxes, bro. You weren't charged taxes while it sat there. What's wrong with you? You're not.
IRS allows penalty-free withdrawals from retirement accounts after the age of 59 and a half.
Penalty free, not tax free. So they're going to charge you a penalty. They're going to put handcuffs on you to sell it before then. But dude, when you're 63 years old, when you start withdrawing, you're going to start paying taxes at that point.
Yeah, you're right. 401k withdrawals are taxes.
Exactly.
So based on that, is investing in a 401k a great option for most people that want to build wealth, or would you suggest there are better vehicles? Maybe what's your take on the clip? And then, what are your thoughts on and I know that it all depends on people's situation. It depends on people's goals. But that being said, what are your thoughts on that clip?
I think 401ks are not, they're not really necessarily a trap or anything like that. They're just like any sort of investment. And really, they're just an account type. It's a qualified account, and a 401k is the tax section that governs that account types. It's a 401k. So that qualified account is subject to subject line 401k. Anyway, they're the majority of what people use. The thing that a lot of people have to realize is the things that Grant were saying that are true is when you take money out minus Roth contributions, they are taxed at earned income rates. I am of the opinion that earned income rates will likely bounce around, but will go up and level out and go down and go up, but they're subject to change. They're subject to legislative risk. And the low-hanging fruit is those qualified accounts because they're all deferred taxes and they just keep growing and growing. So something that I do agree with is that they are a tax burden or a kind of a ticking time bomb, for lack of a better term. But they come with some provisions that can balance that out. For people that don't want to retire before the age of 60, most people is 62 because that's when they can file for Social Security and get their 401k. That's a great tool for them. That's a way for them to invest long term. They will build wealth in the latter part of their retirement years. The last 10 years of them saving will be the majority of the growth in that account. There's a company match. There's easy to select investments. And that's how a lot of our clients that are retirees have reached the retirement desk. So no, there's nothing wrong with the 401k. No, it's not a trap. But I think that the way that what he's referring to is how it traps you into becoming the IRS essentially leeching off of you for the remainder of your life, because you want that account to stay around. You want it to keep growing. And the more that it grows, the more taxes that it generates for the IRS. And then when those monies go to your non-spousal beneficiaries, they have to be liquidated within a 10-year period under current law. And it causes a lot of taxes for your beneficiaries. So the majority of my money for myself and what I use for a lot of my clients is non-qualified accounts, sometimes referred to as brokerage accounts or individual brokerages or TODs or joint accounts if you're married. And I like those better because you do pay your taxes today. It's after-tax dollars. The money goes in, it still grows tax deferred. You do get taxes on the dividends that are paid to you every year, just like you do for your bank account. But that money grows, and when you take it out, it's under the long-term capital gains taxes, which are much more preferential than earned income taxes. And there's even an option to have zero income taxes if your taxable income is low enough as a married couple or as an individual. There's no age 59 and a half restrictions, meaning you can take the money out prior to age 59 and a half without paying a penalty. You still would pay taxes on earnings, and there's no contribution limits. So people that want to retire young or retire early, they can front load or really heavily load up that account and then use that to either buffer off their income with some passive income, or then fully retire at an age that they choose, and they don't have to deal with RMDs in the future, required minimum distributions. They don't have to deal with additional income taxes. And those monies, when they go to non-spousal beneficiaries, just like our real estate, get a step up in cost basis. So they're very tax efficient to pass through. They also, minus, you need a trust for real estate, but assuming you have a trust with your real estate and you have a beneficiary designation document with your brokerage account, those fully supersede probate as well. So I prefer that to a 401k. Some people have really healthy matches in their 401k, and it's hard to balance giving up free money because it is free money. And it's 100% return on your dollar if it's a dollar for dollar match, right? So it's that balance. But I mainly say that account type is really for people that are planning on working for the majority of their life and want to retire when they're much older. Now, a lot of my clients want to retire prior to then. And so it really doesn't make sense to put money into a 401k because it's not in line with their goals. So that we use more non-qualified investments like a brokerage account, like real estate, like life insurance. And those three things are the non-qualified areas we can put our monies in and use them in a tax efficient way prior to any age restriction and whenever we really feel it necessary.
That was a great way of explaining that. And I'm sure there's probably some listeners that feel more aligned with retiring earlier, having a little bit more holistic approach. to invest in non-qualified stuff, like you mentioned, on the life insurance, brokerage accounts, real estate, and they want to accelerate that versus working forever. So for somebody that does have a 401k that may want to explore other options, what would you suggest for them?
They can obviously reach out to us by texting the word X-ray to 844-447-1555. Sorry about that. You get to the last four and it slips. And me and my team will connect with you and we can go through your portfolio, see what you're doing, and compare the benefits and the downfalls. Normally when I run a plan out from somebody that is, I just did one last week. It was 401k contribution versus brokerage account, same amount of money. They were going to get a match on the 401k, but they were going to have access to the money on the brokerage account. We looked at the tax differential, and the highest taxable income level when they used the brokerage account primarily was about 18%, whereas it got up to 38.6% when they had a 401k. And so even if we took out more money from the 401, same amount of money from the 401k, we had much less money after tax or net. So we ended up having to make more money to take more money to net the same amount that we would just by using a brokerage account. Oh, and we would have to work until we're 59 and a half. And these people wanted to retire when they're 55. There are ways to take money out of your account before 59 and a half. 72T is a tax code that would allow that. It's not beneficial. All of the things that are rule bends tend to, in the long run, not work well in your favor. So there are 72T distributions. There are things to do like that, but they're still just not. For people that want to retire earlier than 60, we generally think that you have to put your money into non-qualified areas because that's the only place you can go unless you're willing to pay a 10% penalty on top of income taxes, which most people are not.
Yeah, you don't want to do that for sure. If you have an option or a path not to do that. So if you guys want to connect with Ryan and his team, that's text in the word X-ray to 844-447-1555. Shifting over to our standard recession talk track, we saw a recent inflation poll that 72% of Americans think inflation is increasing, even though it is showing to be retracing down, according to a Harris poll conducted exclusively for The Guardian. We saw the number of job openings recently changed little, but it did drop down so less jobs available. We saw the initial unemployment claims tick up a little bit more last week. We have unemployment claims coming out again this week. I did see from a Goldman Sachs article that just came out noting that the S&P 500 index is unlikely to deliver any more exciting gains from now through the end of the year. What is our overall thoughts on, are things slowing down? Is the economy starting to plateau a little bit? I know they did revise down GDP expectations. Obviously, inflation seems to be pulling back a little bit. But what does this mean for the market? What does this mean for rate cuts in September, in November? What are your thoughts there?
So just all that data really points to it's a softening of the labor market, which is good because it's been pretty secularly tight these past year and a half. So that's good for rate cuts. For the futures on that, it didn't really do much for the September number, but it did kick the November probabilities of a cut pretty far forward. So I think people are still pricing in that fall time, and the market is pricing that in now. As you can tell, it swings pretty wildly. So we could see a cut still come in September based on data coming in between now and then. But that's just how we sit today. It's interesting to see the consumer report that they feel like inflation is going up. I think really what that tells me is that they just don't feel like the policy that is enacted right now is doing much to move the ball in the other direction, even though it slowly is. And they feel like there's less action and more inaction. And so that's what I hear when I see people say that, because if you compare costs of goods right now to the same time last year, they were significantly higher across the board. People just still remember what cost of goods used to be, and they yearn to get back to that area so that they can have more discretionary income to spend in other areas. And right now, I think that they're feeling it more because they have more time on their hands with their kids, and they want to go do those extracurricular activities that they may not have the additional money to do right now. So I think that's really what I'm hearing when I see that, is people are starting to say, man, I have time to, it's summertime, it's travel time, it's vacation time, but I don't have discretionary income to spend on those items like I used to.
Yeah, makes total sense. We'll continue to track what's going on in the market there. You're still of the camp that we're going to see at least one, if not two cuts through the remainder.
Yeah, this year I still think there's going to be cuts this year. Is again based on what I'm seeing today. I make my best guess because that's all it is. I don't have a crystal ball, but right now the market is saying that fall time is looking like the most likely area if we did have cuts. And I do think the Fed still does need to cut right before it's the right time, and so they don't overshoot or undershoot that soft landing.
Yeah. Quick little update on real estate, single family right now. Interesting statistic that just came out from National Association of Realtors that investor home purchases are rising for the first time in almost 2 years. This is according to Redfin, found that investors bought 44,000 homes in the first quarter, which was almost 20% of the homes sold in the first quarter. So roughly 1 in 5 homes sold in the housing market are being picked up by investors. And it made me reflect a little bit on this. Now, we're still seeing affordability be a major challenge for a lot of people, yet stuff is still transacting. Buyers are starting to feel a little bit more normalized with the psychology around having a 7% 30-year fixed mortgage interest rate. We saw U.S. home prices increase 5.3% year over year in April. But Dave Ramsey, I'm not always a big fan and subscriber to his kind of no debt philosophy. I'm a believer in good debt, leveraging debt in a strategic, risk mitigated manner to go out and create more upside and opportunity for yourself. But when it comes to the housing market, single family specifically, he's usually pretty darn spot on. And I do a lot of what he has to say there. And when you think about some of the best stores of value through all of the volatility that we've seen over the course of, we'll just say, post-pandemic, housing has probably been the best one across the board if we're talking about asset classes. And minus, I'm sure in your world, a couple key companies and stocks that you can pick. But some of the best returns have come in housing. Hence why we have an all-time high in home equity values in the history of our housing market. And Tone, if you want to pull this clip up really fast, this is a video of Dave Ramsey. What I thought that was interesting to me around why we're seeing more investors picking up single family real estate right now, it's because of long-term and historically the store of value we've seen be held in real estate as a safe, risk mitigated asset class that produces generally safe and stable returns. And so those that are sitting on the sidelines that are waiting to get in and buy their house, or if you're an investor and you're thinking that you're waiting for prices to dip, if you're playing just like we do in the stock market, if you're playing the long-term crock pot versus microwave mindset in your investing game in real estate, housing values are going to continue, in my opinion, historically going to continue to climb and go up. And so this was a little soundbite from a recent Dave Ramsey clip that he shared that I wanted to share with you guys.
You can look up this particular YouTube 5 years from now and you're going to go, yeah, that old fart was right again. Median house price, all-time high in history right now. And you thought 2020 was crazy. And you thought 2021 was crazy. I'm telling you, I'm not predicting it to go nuts again, but the idea that some of you are still sitting around waiting on this market to correct is hilariously stupid. You're that wrong. Dave, that's not going to age well. Hey, I've aged pretty well in general. There's a couple things I've missed it on, but I pretty much call it on a lot of these things. Prices are going to go up. Rates are going to go up and down. They always have, and they always will. Let me tell you guys, this is what's happening with real estate. I promise you.
That was, just a little Dave Ramsey rant, right? But I think what kind of validates that is investors are seeing a safe store of value long-term as well in housing. And it has shown historically to do what he just said it does. Rates go up and down. You got legislative risk, you got the Fed, you've got economic risk. But at the end of the day, in terms of vehicles that build wealth, that generate income, that provide returns, housing and single family real estate is probably one of the best out there.
Yeah, no, post pandemic, essentially, if you bought your house in like 2020, you've had about 100, if we use like the Case-Shiller price index, which is probably
Yep.
one of the more accurate ones. I think since 2020, it would probably say that 100 to 105% is I think that would be your annualized return. Like it's doubled. Same period of time, you would have got about 160 out of the S&P, but it's not the income. It doesn't generate as much of it's more of a pot return. You get a bigger value and then you generate income off of that in the future versus over the period of time having an asset that generates an income plus it's appreciating. Both have done very well. The S&P would have came with a lot more, quite a bit more heartbreak and heartache because you would have seen your value almost intersect back with housing while housing was still going up, and you have to be able to ride through those times of volatility. And so the people that make the most money on both sides of the street buy in times when the market's volatile, and that could be either in real estate or the stock market because both of them long term still do this. And I think if my common sense is rubbing its two brain cells together, there's more and more people, there's less and less land, there's always a demand for a safe place to stay. And that's always going to be innate. And then I think on top of that, not everybody needs, even though they do, to invest. But people will take that money after they get those houses and invest that money and become investors for the back end because they both, like I said, complement each other. But yeah, I think that both of them are very good. I think that nobody would have anticipated how much real estate has or how well real estate has done. I think people actually thought the opposite when the pandemic happened, but the demand for people to get out of their house what they really want because they were stuck there for so long, I think that's still fresh in people's mind. And you still see that effect rolling in now today.
That's why there's just a great holistic approach between, right, like you said, the three vehicles that at least we subscribe to in that holistic planning, which is you've got your stocks, you've got your real estate, you've got your life insurance. All of the symbiocy of those things long-term working together are great. One, to mitigate risk and downside, but two, to catalyze compounding growth and upside together. That with one, yeah, you get it. With two, you really get it. With three, wow, now it starts to get real fun and sexy. And so thinking about how that ties into your investing portfolio and strategy, I think is something that more and more people are waking up to. Now, just to close out on the single family inventory, we always like to track that. Single family inventory continues to climb. We got 1.7% growth week over week. Inventory is now up 22.4% from the February bottom, and it is at the highest level since August of 2020. Now, it is down 35.7% compared to the same week in 2019 pre-pandemic, right? So still a healthy amount of supply still needed, especially since the demand has somewhat been curbed and the market has slowed down a little bit. We did see the richest 10% of zip codes delinquency rate has climbed from 4.8% in the second quarter of 2022 to 7.4% in the first quarter of 2024. Now, obviously, that's all relative in terms of where the delinquency rate was pre-pandemic. But that being said, we also saw in April of 2024, pending home sales fell 7.7% month over month, which obviously just shows, right, that there's a little bit of a decline in demand. Even though inventory is ticking up a little bit, we're seeing the amount of homes, the absorption rate of buyers coming into the market and absorbing those homes that are on the market, that dropped 7.7% month over month. Midwest and the West experiencing the largest monthly declines. And the reason, a big part of that is when you see states like California, whose median house price is now over $900,000, you're going to see, obviously, with the cost of capital, getting a loan from a bank, the ability for people to afford that type of house, that pool gets smaller and smaller. And so we'll start to probably see some pullbacks in some of those markets, hopefully, depending on what side of the coin you're on. If you're a seller, you're probably happy about that. or a homeowner, you're probably happy about that. But that being said, we'll continue to track what goes down in politics, the market, stocks, real estate, to help you make more informed decisions when it comes to your wealth building journey. As always, we appreciate you guys tuning in each and every week. If you enjoy the show, all we ask that you take 60 seconds, leave a review on whatever podcasting platform you enjoy listening to this content on. It's the easiest and freest way that you can help support us. And with that being said, don't forget to check out millionaireMindcast.com for all the great stuff we got in the store for you guys. Until next week's episode, keep investing in yourself and your wealth on your march to $1 million and beyond. Cheers.